So Kelvin carry the weight now.
No, no,
Lai
no,
liao.
no, no.
Kelvin, you can. Eric, you want to start the
Eric,
moderation?
Eric.
Start what ball rolling.
Start already. We are live. Okay, welcome back to another episode of the Backholder Pod. So this time around, it's a little bit hard to schedule our normal timing. So that's why there's this special I don't know what you want to call it, special episode where we get together, I think maybe for the following maybe 45 minutes to an hour to really talk about some of the recent developments around the markets today. So just to do a sound check, does everybody hear us loud and clear? Everybody want to go one round first?
Hello.
Hello.
Can you hear me?
Yeah, can. Buti? Oh, and likewise,
Hello.
please remember to smash the like button as well. Okay, yes, I see people acknowledging us. Okay, so I think just to kickstart the entire discussion, I think we are currently in the big tech earnings season. So many companies like Netflix, Microsoft, Alphabet, Meta has also recently released their earnings results. And I think it's a mixed bag. So there are some that the markets reacted very positively. And on the other hand, there are some that didn't really react positively. So I think just to go down the chronological order, I think one of the most anticipated one was Microsoft. So I think being a huge Microsoft shareholder, I think Bunti want to get the ball rolling in terms of Microsoft's earnings, recent earnings, and your expectations and how they fared thus far.
Yeah. So I start first. Later, Kelvin carry out with the all the good stuff. This is just a bit teaser. So Microsoft, I read through the earnings call, and for those who watch the market, you notice that after Microsoft released the earnings, the share price actually tanked, right? But when I read through the results, right, actually the result is quite good. So they show very decent growth, and then profit margins also looks good. And then they shows that okay, they keep investing in capex to ride on this AI trend coming out for all good stuff, right? But somehow share price drop. Those people who didn't follow, they say, oh, like all this share price, they can be random, they can be like good result doesn't mean that the share price will go up, stuff like that. But actually the reasons the share price drop is because the guidance is actually lower than the expected now. So that's the reason. But actually, if you just look at the result, it's actually very, very good. And just for those who didn't follow Microsoft, right, I just want to like give a quick summary on like what's the buy thesis of this company. Imagine you know all this, like they call it Copilot, right? Copilot is like the AI assistants that help you out with all the your daily tasks. They want to embed it into like the coding, and they want to embed into like Microsoft Word, Excel, and so on. So this will come over the next I call it like 12 months, right? So and they're going to charge money for all these services. So I think that's the good things lah. And later, if we can go into more details, I can share about like how much can this like all these features, right, contribute to the top lines and also the bottom line lah. So hand over to moderator.
Okay, I think I actually have one question before we jumped onto. So I think just to structure this episode more clearly. So I think we all kind of have our own area of expertise in terms of positioning in big tech and stuff like that. So maybe if any of you have any questions, I think people that are tuning in right now, we have around 35 of you guys. So before any questions, if you want to ask a question, please smash the like button first. If not, after you smash the button, then you can type in the question. We will go company by company. So we'll first go into Microsoft, then maybe we'll touch a little bit about Google, and then go into Meta. And then maybe after that, we'll round up with some of the macro discussion. And to kind of keep the discussion tight, we have an allotted time lah. So we don't get too excited about a particular company. So yeah, so if any questions on Microsoft now, please feel free to type in the comments. So I think just the first question from my side, right? I was looking through some of the numbers, and I think Microsoft did a good job, fairly good job in segmentizing many of their business arms. Actually, to be very honest, I'm only interested in one, cloud computing. So I think for cloud computing specifically, right now they're posing 15%. And I think for reference, Amazon haven't released their result yet, but Google has recently just also released, and they're relatively speaking a lot faster. Yes, they're a lot smaller, but they're a lot faster. I think near 2 times actually. So Google Cloud actually grew by 27.9%. Microsoft actually grew 15%, like slowing down at a pretty rapid pace. So I just wanted to get your opinion on what do you see of this entire cloud sector, and maybe also cross-reference to Amazon. Do you have any expectations on AWS as well?
I guess this question for me, right? Yeah, I didn't like. I won't compare Microsoft versus Amazon. I would just say focus on each company and looking at their own strength. So one strength, key strengths of Microsoft is really their AIs. So you remember ChatGPT. This is the companies that like OpenAI, right? Microsoft really have a deep partnership with them. So and all this, right? It's not just like simple apps that you can run the chat gpt. You need all the data, and you want to do play around, not just the like the general chat gpt. You want the chat gpt to train on your own data, these kind of things. There are a lot of things that they can do, and just having the codes itself is not sufficient. They really have to have the data. And this, when you talk about data, then you talk about compute, then all these things, right, is like the entire ecosystem. And Microsoft is really like very strong in this area lah. And in fact, in one of the points that Satya Nadella mentioned in the earnings call is that this chat GPT, right, or this entire AI layer is that were embedded into all these services, right? They actually help out with their cloud computing, Azure's business lah. So I think that's the key strength.
Okay, I'll pass the time over to Kelvin or Eric. Is there any open questions on Microsoft? I'll take the panel one first. The comments I'll take on later. Yeah, Kelvin.
So for Microsoft, I see it's similar to what Punti said. The part that will drive their growth will mostly be from AI lah. So if you see companies like Facebook and not Facebook, Meta and Apple, they are going to collaborate with Microsoft to build their productivity thing on their platform lah. So this in the end, it will still benefit Microsoft the most lah. One is from the app side, the other is from the server side lah. So I think they will drive their growth going forward though. And I think Microsoft has that the cloud computing market share is second just right behind AWS lah. AWS is about 32%, Microsoft is about 23% lah. Theirs is called Azure. Then far behind is the Google Cloud lah, which is just like 10%. So I think AWS and this Azure thing, they will benefit the most lah from all this AI hype thing. Not AI hype lah, AI growth thing lah. So that's my view.
One thing I also wanted to point out, maybe I can quickly share my screen if possible. Sorry. Okay, can see? Okay, I think just to briefly shed some light, right, in terms of what the market is expecting and how the company has guided, you can see roughly, to be very, very frank, Microsoft has a very matured business. It has a lot of business arms, and you can see that they segmentize it quite a lot. So I think the shining sparkle here in the entire Microsoft business is really Microsoft Azure. I call it Azure lah. I don't know, is it called Azure or Azure? But anyway, for Azure wise, they did guided 25 to 26% for the following quarter. While the rest, if you have to really take a closer look, right, many of them are in the low to mid single digits. And in fact, I think there are some businesses, specifically like the PC and hardware products, they are kind of, I think, collapsing. In fact, I think it's going down in 10-20%. So maybe that's also why maybe there's some sort of expectations reality mismatch. I'm not too sure why the market reacted this way. Personally, I don't really have a huge investor interest here, so that's why I haven't really been following them. So but I do believe that in terms of outlook and in terms of guidance wise, it's more important for you to see the major trend and not like quarter on quarter, like you just scope in on one quarter, but rather really focus on the bigger trend. And we know that we are sitting on this tailwind on like all the cloud market and how the cloud services and the cloud computing business is gonna continue growing. So yeah, that's just my perspective on this. Any ending thoughts? If not, I'll take on questions from the floor.
Yeah, let me just add one more point, right? Just like I mentioned, I can add a little bit more, right? So you know, like those who use the Copilot, right? Actually, here you can see very clearly that different companies, right? Because like Google's and also Microsoft, they reported on the same day, right? And both of these companies talk about AI. The question is more like how do we how does all these companies monetize on the AI? And the way they do it, right? You compare these two companies, they are very different. Microsoft, right? How they do it is just to we come up with all this productivity tool and we charge our customer for it. So it's very simple. When it comes to Google, right, it will be slightly different. Google will be say, okay, we do all this bot chatting exercise and so on, and then when you use it to research your Japan trip, your Australia trip, then we will kind of like slot all the advertisement in there and try to monetize on that. Basically, it's advertising model. So two of this is very different in terms of what's their business model. And for Microsoft, I think it's it's to me, it's like very direct, it's easy for them to charge. So I give you some numbers to help you visualize how much revenue they're going to get from all this AI productivity tool. So they have like currently they have 350 million user using all their like Microsoft 365. Basically, these are like PowerPoint, Excel, like normal stuff like typical employees in the company, they will use it, right? Then out of this, let's say 350 millions, right? If every customer, right, they're going to charge additional $30 just to give them like the ChatGPT kind of generative AI tool to make them more, productive, just only need to charge $30 more. That's like $360 per year, right? You take the $360 per year, multiply by the 350 millions user that they have, right? That's additional like $126 billion. 126 billions. You don't need to like 100% of them cover. Just let's say over some period, you only need like 50%, okay, that actually subscribe to this, right? So you suddenly have like 63 billion additional of revenue. So that's like 30% of their current revenue. So these are the stuff that not yet coming. Like because we can't pay a valuation of a company based on the earnings that they have it previously, right? We want to buy in advance, like stuff that people haven't really seen that in the financial results, but we can see that they are coming. So I think I'm still very bullish on these companies because there are still many things, and the $30 is just one service, right? They can come up with 2, 3, 4 different services, So I think that's the reason why even the CEO Satya Nadella, he also very very bullish on the trajectory of the business now, and you can sense that from how upbeat is he when talk about AI. So yeah, that's my closing on this.
So on this topic of ChatGPT, a question from Sean. He's asking, I mean, he specifically named Bunti. So does Microsoft ChatGPT Edge give it a good advantage versus new entrant like Elon Musk's Truth GPT? Is there a strong moat in this case? Or actually, if you were to throw in any large language models,
Yeah.
but
Actually,
whoever.
Yeah, when I think this one, I think this is not even like a strong argument, because I think among those who know about all this ChatGPT, they all agree that actually there's no mode when it comes to like large language model. Like everyone can just copy. So the only one things that you can still argue that there's some mode to it is how much data that you have. So data could be a mode. I think this one separate the big tech versus like all the small companies now. So this is one. But the real mode, right, in my opinions, right, is really the existing relationship that Microsoft already have with all the companies that they're already using Windows, already using Microsoft products, because actually they don't need to do much in order to get additional revenue. Imagine that just one service that another company can create, right, a startup, right? They want to, roll these services. They want to sell these services to a new customer. They have to go through, due diligence. They go through the sales cycle and so on. It's a very lengthy process, and they have to charge a high price in order for them to break even on their ROI, right? But for Microsoft, it's like they don't need to do much. They're already like selling Excel. Now it's just the additional, features on your Excel to make you more productive, right? You just click a button, then okay, you pay $30 per month. Then you have all these good features that you can actually sell, and they're going to get a good margins out of that now. So I think that's the good stuff about the model. So it's about like build on top of what they already have instead of like have to create new things from scratch.
I think
To add, to add
Kelvin?
what Bunti said, I think each of the AI chatbot thing, right, they have their own advantage. So I tried using them on and off in the past. I'm still using them now, but I'm using another plugin. My impression of them is that, okay, so for ChatGPT, specifically for ChatGPT 4, is more, how to say, is a startup lah. ChatGPT is by a startup, so they can actually take on more risk, meaning they don't have to be as filtered the things that they output it don't have to be as filtered as like maybe the output from Bard or Bing GPT lah. So for this, I would say like ChatGPT 4, if you want more honest answers, ChatGPT 4 will give you a better answer. Then for Bard, because it has a lot more data compared to Bing, just because that it has the search thing, whatever, it has more data, right? In terms of if you need real-time information, Bard will actually give better result compared to Bing GPT. Then sometimes Bing GPT I tried their result is not as good as Bard, I feel. Then finally for Microsoft, their AI is more towards productivity, how to make things better. So in a way, each of them are excel at what they do. So in terms of competition, they don't really have to fight with each other. So because each of them have something to offer by themselves.
Yeah, just the business model itself is already very different. I have a questions, right? Just to ask, maybe more towards Kelvin and Eric, right? So, like for Kelvin, you are mostly doing, content creations. So you might need to use like this tool to help with your research, maybe to create some video. And for Eric, I don't know, maybe it's like prepare some materials, right? For your tuitions, right? So I just want to know like how much have you adopted like all these AI tools into your current workflow? Is it like a lot, or is it like maybe just meh? You just prefer to do it your old ways? Yeah, maybe start with Eric.
Okay, took me a while to find the unmute button. I think for me personally, I'm just using the AI for basically the captions. Like the videos that I'm making, I use the AI tool to like, because they kind of interpret what I'm saying, right? Sometimes it's a bit off, so I got to edit. But most of the time, I would say about 90% of the time, they are quite good. The AI is quite good recognizing your speech. So that's the one of the first things I'm using lah. In terms of the design and all that, I I think it was embedded in Canva. They offer some beta testing thing, but I haven't tried it out yet. I think I will be trying it out soon. Will let you guys know how I
Yeah.
find it.
Follow up. Is it paid service? The one that you mentioned, the one that you use?
Which one?
Free one or paid one? The caption.
Caption. Caption is free one.
Okay. So no one is earning from you. What about Kelvin?
For me, caption, the YouTube caption always think that I speak in Vietnamese, so I don't like using them. But I also starting to use another caption software for doing certain stuff. The name is called CapCut. Quite accurate most of the time. Otherwise, it still thinks I'm talking Vietnamese. As for research stuff, right, I don't really use like ChatGPT, but all this, because it's like their answers it feels very random. So because if I do a Google search, it will give me like a whole page of results, and I can just find the one that's most relevant to me. But if I ask like the Bard or Bing GPT, they just give me like one or two answers, then give me the reference. Then I wouldn't know like if is this the best answer or what. So I don't really use them for research purpose because I don't trust them to give me the best answers. But for stuff like logical questions, something like can you help me complete this sentence, or can you give me 10 suggestions on what title for this video, that one it can actually do quite well. So in terms of content generation kind of thing, in a way, filling up sentence, suggesting topics, this kind of thing. But for research, no I still don't trust it yet.
Kevin, I want to ask, have you tried using it for thumbnails? Like, can
No
you ask it to generate like 20 different thumbnails, those kind of thing?
Is that possible?
I thought I heard Mr. Beast say something like that before. Like to
This
generate.
one I'm not sure.
Okay, maybe you can go
I
and
need
try
to
it.
look into it.
You mean thumbnail ideas or thumbnail, like ready-made
Like,
thumbnails?
like ready-made. Like, so you
That
got
one I
to,
think is another software though.
yeah,
Cause
you got to pay for it. You got to upload
yeah.
like one version, right? Then can you give me like 20 other versions of this? Something like that.
Yeah,
Yeah.
I should try it out.
Okay, I think pivoting over, Donkey did say Google says LLM got no moat. So in case you missed the discussion, please rewind back. We were discussing about large language models inherently not having a moat, because ultimately it's trained on this given set of data points, and whoever is able to aggregate the most latest data will probably have an edge. But I think moving on, I think we have specifically discussed about Microsoft. So now I think in terms of Alphabet's case, wait, before that, I think Kelvin, do you have a model that you want to share with us from Microsoft's perspective? Kelvin said that he created a DCF model for all
Whoa.
companies. So
I
maybe
think later,
you wanna...
after everything, then at the conclusion, I
Okay,
will
can.
just...
Can. So now we will jump over to Alphabet first. So wait, I just wanted to confirm again. Anyone holds Alphabet here?
I
Anyone?
I
have,
could buy a bit lah.
small, very considered small.
Small. Okay, so Kelvin, you want to... Eric have? Also have small.
Not me, my wife.
Oh, okay. Kelvin, you want to kick off the Alphabet's discussion? Have you read their recent earnings report, and do you have any opinions on it?
Wait lah, let me recall. Okay. For Alphabet, let me just show something.
Nice. Good stuff coming.
No lah. Wait lah. Google. Just by the way thing lah. If you guys do not know, okay, this is not sponsored obviously. But if you guys need some quick reference to all this financial stuff, all those broker apps, for example, at the bottom you can see this, like for Alphabet, you can see a very quick breakdown of what's happening. For example, you can see like Google service, which includes like search and the rest . So this part is the advertising part, which takes up about 88%. I think no, it's more than that. So for advertising, it's about... what's the advertising? Google search is about 58%. Then for the remaining, is like cloud. It's just a small part of it. So I would say for AI stuff, it doesn't benefit Google as much as compared to like Microsoft, which is embedded right into their productivity tool. So you can see sort of how much it will affect the company. Then what else? Okay, but what will help Google is the search for AI, not necessarily the cloud part. Is the search advertisement part that will help Google the most. Personally, I'm more bullish on Google as compared to like Microsoft just because it's cheaper now. So that's my thing. Then the other thing is like, so if you see like Google, the other thing is if you compare AI stocks, Google to other AI stocks like maybe Nvidia, C3 AI, Palantir, right? Google is surprisingly quite cheap right now. Their PE is at 27 versus the rest, which is easily like 30 plus. Nvidia 200 plus for Bundy. Yeah, so
Thanks.
so personally, if you need some like AI play companies, right? Google is probably the cheapest right now. Is at a better valuation as compared to the rest.
Yeah, but there's a reason why like their valuations is relatively cheap compared to the other big tech. I think there's okay. There are those who simplify it too much to say, oh, OpenAI come, ChatGPT come, replace the entire search. I mean, that's overblown. But the true stuff is that, right? Like you compare Microsoft, right? Microsoft is like status quo, I don't lose anything. You just continue to use your Windows, Excel, you continue to pay me. And I have a layer of productivity tools. I charge you extra, you become a lot more productive. And just from the value that you get, right? I believe like sooner or later, people will subscribe to that just because of the additional productivity. But when it comes to Google, right, it's different. Google is like status quo. What happens is, right, people will come and disrupt them in terms of like all this ChatGPT, give them like direct answers instead of having them need to go through links, right, to search for their answer. So that one will take away some of their traffic. Then the other things that is quite worrying is that now in order to compete, right, they have to buy all these expensive like GPU to come up with like BART to give you to serve you, right? But at the same time, it doesn't increase their revenue much if what they are doing is still like placing ads here and there. So in terms of the additional upside, right? Maybe there are some like what the CEO Sundar Pichai also mentioned in the recent earnings. He said that they are going to monetize more because of all these new features that is provided by AI now. But I think it's still harder to see that how they can use all this AI to increase their revenue. It's not as clean, as simple as Microsoft. And that's one reason. Second reason is that macro is also quite weak over the past, I don't know, maybe 6 to 12 months, right? And I mean, advertisement business. I mean, Kelvin, maybe you can share a little bit more in terms of your revenue, because your revenue actually go hand in hand with your YouTube revenues, right? So you can also see that okay, revenue has also came down over the past 12 months, right? So that one, the macro side also hit Google's YouTube, all this more than the other business lah. Yeah. So I just want to explain why they are relatively cheap lah. Yeah.
Then if I can chip in and ask Bunty, so why do you still hold on to Alphabet?
Buy while cheap ma, learn from chicken. Yes.
Oh, okay,
Yeah, I do
sounds.
recognize that the valuations is attractive, provided that you believe that there's still growth. I mean, in the futures, right? So I do see that from valuation perspective, yes, still attractive. I think they are much attractive than a normal random company that you pick from, call it like S&P 500. Yeah, just because of like like all these tech, like big data, they still have the most data compared to the other big tech. Right?
I think my. Oh wait, Eric, have you seen Google's or Alphabet's earnings? Do you have any comments on it?
I just have a quick glance earlier on in the day. I think they beat both revenue and profit. Yeah, I haven't looked at it in detail, but I think yeah, they beat, and I think the after hours trading was quite okay. They didn't really say that they. I think the forecast was not that bad. Yeah, let me go back and check again.
I think if I can, while Eric is checking, I'll just point out two things. So I was looking at it. There was this very peculiar line where they said that Google was actually re-recognizing how they depreciate some of their accounting policies. They actually did extend some of their network equipments from like 4 or 5 years to 6 years. So that was also why I think in terms of their earnings it increased, because if you reduce depreciation, you spread it out over more years. That's why you accrue more earnings in the near term. And I think the second part in terms of cash flow from operations for all the nerdy people out there, I think just this free cash flow for this quarter is a little bit balloon. I think there's some very weird increase because of some income tax that is deferred to the last quarter or something. That's why cash flow of operations, if you compare year on year in the same quarter, 19.4 billion suddenly go to 28.6 billion. So it's a little bit weird. So you kind of need to normalize the numbers. So that's why I say every time when you want to do extrapolation or do any kind of modeling, do take into account some of these very lumpy numbers. But yeah, back to Eric.
Yeah, so I'm just looking at some of these reports. I think their cloud actually improved, strong growth. The only other news that I thought was yeah, I left a little bit of an impression was this uh finance chief, right, was promoted to chief investment officer. So yeah, I don't know the person, so I'm not really sure like whether is this bullish or bearish. But I think the results, if I just look at the result, is pretty okay. Like the advertising, I think went up also across their YouTube and their search engine. So it was a pretty good result lah. That's why I think it didn't really fall after the earnings. Yeah, it went up instead. So it was pretty good.
Actually, if I can jump in on this advertising part, right? Because I follow quite closely on Meta as well. So it's quite ironic because when I was looking at both Meta and Alphabet, one perspective that I took away was really the idea of whether we have a soft landing or a hard landing or whatever landing, whether we land on our backside or not. But anyway, it feels like if there really is a soft landing, advertising dollars are going to be channeled to the big players because purse strings are tightened. People are not going to spend frivolously. So that's why when you see Snapchat release their earnings, it was down like 10-20% because they give like horrendous guidance and the numbers were atrocious. But then on the flip side, when you look at the strong players, the two big brothers in the advertising space, Amazon hopefully coming out, their advertising numbers should be hopefully very good as well. So I think if you look at the three strong brothers, Amazon, I don't want to say first, but it does seem like all the advertising dollars are going to congregate to the top few. So the worry now is whether we really are going to achieve that soft landing. If not, if it's a hard landing, then yes, all of us are gonna all these advertising companies all can in Chinese it's called 喝西北风, meaning all don't need to spend money because everybody don't advertise. So that is a huge impact to the entire advertising industry. But if it's a soft landing, then dollars get congregated to the top few players, and that's when you see why an economic mode and why these top dogs will continue flourishing in this sort of environment. That's just my perspective. I don't know. We can take the following few quarters to continue observing as well. Yeah. So anyone, if not,
just to add a bit, I know a little bit jump ahead here, right? But Fed just announced the 25 basis point hike, right? And then there's one line that they mentioned is that Fed staff no longer expect a recession. So see, cancelled already recession. Never mind, I can reschedule. I don't know, but for now it's cancelled. Okay.
that was a bit scary, but okay. I think Isa just came in to say, just to add on to what Eric said, the Google CFO becoming CIO is seen as bullish because she is seen to be likely to clamp down on loss-making other bets. But I think personally, actually, I think all of us here have very, very small positions in Alphabet. I think when we bet on Alphabet, we are not really betting on like all this, I don't know, moonshots. I think they call it moonshots because for, I don't know, the last 5 to 8 years, there really hasn't been anything groundbreaking. And Google does seem a little bit more passive when compared to many of their big tech counterparts. You see ChatGPT come in, then they faster scramble and release Bard. And then you see many of their advertising architecture. Yes, they still currently dominate Android, they dominate search, but we haven't really seen leaps and bounds of innovation. But let's hope and see whether the new CIO can come in to bring a different flavor to the discussion. So now I think my most excited one, because I do have a position. Or
before you move on, sorry, there's
yes.
a question asking about like Google search revenue is over 80%. Is it risky or not? This one I want to answer. So first thing first, the revenue, it comes like mostly from the products that people use. So like YouTube, Gmail, Google search, this kind of things. So unless people move away from using this, there's no way that all this would pose a risk. Then the other thing would be like people will point out that AI is going to take away search from Google. This was the discussion earlier this year. You see that when this whole Bing GPT came out, right? Everyone was saying, this ChatGPT, this Bing GPT will steal all the search away from Google. Then you will notice that after that, there were no longer any discussion about that, especially after all the Bard GPT, but Google Bard has came up with their own search thing. So it sort of like equalize off the advantage that Bing GPT has. Then just to add on, Bing GPT, getting confused. ChatGPT is, it seems like their performance has started to drop, probably because they are adding more and more restrictions to what it can output. This is the first thing. The second thing is the users who are going to the traffic to ChatGPT is dropping. As compared to last time, it was only going up, but now it has sort of like stabilized and is no longer growing as fast. So for that, right, I think all of us can see for ourselves. Like, for of us, we don't really really even use these kind of AI tools ourselves. So unless there's some really revolutionary thing that makes us want to use it, otherwise I would see that there's no real threat here yet.
I think personally for me, right, just to add on to what Kelvin was saying, I don't use ChatGPT a lot because the response is, I don't know, is it me, my input or what? It's always very wordy and it's like asking me to read like multiple essay. So I feel quite tired just looking at it. So I like, okay, I don't really want to use it. Anything I want to know, I
But
just Google much
but you can
faster.
restrict though. You can restrict,
Hmm?
like, give me an answer within 20, 50 words or something. Like, you
Oh,
can
is
play
that?
around with GPT.
Oh, okay. Because I didn't know that, so I just key in my question, then you like come out with like 3 very long paragraph, and then I feel tired just by looking at it. Yeah. Okay. So next time I know.
Yeah. So anything else before we circle up the discussion? Oh yes, I think what Chiwi said, just to echo what he said on the advertising front, I also it was a very short call. I think it was around 1 hour. I briefly listened about understanding Google is trying to enhance and get more performance from their many AI tools, and I think one of the topics they were saying now, like 80% of the advertisers now use at least one AI powered search advertising product or something like that. That's based on what I've recorded. But how effective or how much the involvement would be from here on, I think we can all guess, and we'll see how it goes. But as of right now, it does seem like, I think on a relative basis, Google do seem a lot more attractive lah, from a valuation perspective only. So yeah, I think we'll circle up this Alphabet discussion. Now moving on to Meta platforms. Just a show of hands again. Who's invested in Meta other than myself?
I
Eric don't
chicken
have.
out. I chicken out. I
Buti
sold.
sold away. Kelvin,
I don't
do you
have.
have Meta? I don't have.
I don't have.
Anyone in the chat has Meta, or am I the only one here that has Meta platforms?
Yeah.
If nobody interested, then I can can close the topic already.
Type meta if you own meta, please.
Yeah.
Just
And also
to
smash the
cheer
like
chicken
button.
up.
Yes, if not, very sad. You see, every time all these falling knife companies, right? Only I come
Have.
and
You see,
oh,
Roy
okay,
said
okay.
he hold.
Okay. I
You
think
see?
just to give some high level numbers, because I also don't want to bore people. I think most of the metrics that you use when you look at social media companies are all trending in the right direction in terms of users, in terms of growth rates, expenses are going down, average revenue per user, everything across the board is growing up. So of course I'm not gonna say that, oh, I knew it, guys. See, I told you so. You're never averaged out, you're lousy. No, I'm not gonna say it. Because I think back then when Meta was really collapsing down from 300 plus to like $80 or something, right? The story and the numbers are very synchronized, meaning you can really tell a very convincing story that Meta has lost its way and the business might continue deteriorating. So to give you an example, I think in terms of operating margins, based on Q3 of 2022, it was at 20%. You're talking about a tech company, a software company, have a 20% operating margin. So I think from that point on, you can see this U-shaped kind of recovery where in the latest quarter is at 29%. But of course, if you have to strip away the reality labs and the metaverse nonsense, I think it's much closer to 40%. So this is the kind of normalization, and you see, basically nature is healing, if I can put it that way, which is why the market is kind of reacting positively in some of the factors. So I think, not to bore you guys with a lot of the numbers, some of the very more interesting terms or things that was mentioned in some of the discussion points and this release itself. They're saying that in Q3 of 2022, the Reels was actually around 140 billion plays per day. So as of last quarter, it actually ballooned up to 200 billion Reels play per day. And also, I think in terms of how the run rate for Reels now, it has exceeded around $10 billion in run rate. And I think based on a recent release, because TikTok is not a public company, you can't really see their numbers, but they did say that TikTok generated around 10 billion last year. So just on the trailing 12-month run rate for Meta platforms, it's already exceeded 10 billion. So which is why I think one of the main concern around Meta platforms then was also about competition. and TikTok coming, taking over the whole advertising space. And then it does seem like I said, nature is healing. And last point, in terms of creating an open source model and using Llama, it's a very complicated thing. I don't want to masquerade as an AI expert, but they constantly tout on this open source model, and they want to create that open source model which serves as the backbone for many of the developers and whoever to continue building on it. A lot of people are saying that this is because Mark Zuckerberg has a chip on the shoulder because of Apple. Apple controls all the devices and whatnot, so that's why he's trying to create his own issue, and also plus the spatial computing, metaverse, goggles, whatever. But yeah, it does seem like, at least for now, in terms of his AI model, his open source model, it might hold more ground compared to the goggles, which is abysmal, by the way. It's trash lah. The revenue actually dropped by 50% on a year-on-year basis. So yeah, that's just general thoughts on that.
Has any analyst asked Mark Zuckerberg on when and how they are going to monetize on threads?
Yeah, he did. So he said that he's not going to focus on monetizing until he has like billions of users. That was his core principle. I think for most of his platforms, it's like that.
Yeah. Are they on track on to hitting that kind of numbers? Did they share any?
I did see, not from the earnings call specifically, but I did see of engagement rates dropping by 50% or things like that, because they're still in the process of building out. I think it was 20 minutes daily average use. Don't quote me on this, by the way. I'm just recalling from the top of my head. I think it was 20 minutes, then it dropped to 10 minutes after like 1 week or something. So Threads wasn't really a great hit. It's a great hit in terms of transporting people from one platform to another, but not really in terms of retaining users and trying to build an entire ecosystem there.
Yeah.
Yeah,
I have one more question. It's more like a survey. So maybe Chicken, you answer first, followed by Eric and Kelvin. So have you used Threads, and then have you compared it against Twitter, and which one is better? So start with Chicken. Then we go to audience as well.
Right. I use Threads. I was one of the first few users actually. I think they have this thing, right? I was like the 2 million something. I think I'm quite early. Because I was waiting for it. But I think in terms of whether I use Threads, initially I think I was still trying to train the algo, but I honestly don't really have time recently. That's why I didn't even bother going into Threads. But even for Twitter, I'm not really a very active user on Twitter. My main go-to is still Instagram. So Instagram, and a bit boomer. I sometimes also use Facebook for my Singapore news, like on your NUS whispers, for example. But that's just my own personal opinion, of course. I'll pass the time over to Eric.
No, for me, I personally, I wanted to use the threads, but in the end, I was too lazy. I didn't go and
So
set up
no
an
account,
account.
no account at all. Like you didn't set up
No
the
account,
account.
because in fact, even my Twitter account is, my Twitter account is also quite not active one. Like I log in from time to time, see some Tesla earnings or whatnot. Then that's it. I don't really use Twitter a lot.
Eric most active on TikTok actually.
Yeah, well, I just want to ask like which is the go-to social platform.
TikTok actually nowadays a little bit more passive, because I keep on watching those cat videos. Okay, I become one of those people who watch like those cute cats. Like, okay, but I should really stop wasting time.
Kelvin?
For me, I don't use that. I don't even have time to use Twitter, much less Threads. But what I notice is that like people who start using Threads at the start, I don't really see them post on Threads now anymore. Like it seems like this whole hype has died down. The other reason is because you can start monetizing on Twitter. I'm not so sure about Singapore, but I saw that elsewhere people are starting to earn money from Twitter. So if people are earning money on Twitter while not earning anything from Threads, this is the other reason why Threads, the hype has slowed down a bit. But then people say that Threads is a less toxic version of Twitter. But there's no way to guarantee that when Threads become more popular, eventually all the trolls will move over to Threads also. So there's no way to compete. Yeah, so I think back to Meta, the weird thing for at least for me, the weird thing about Meta is trying to compete with every company out there. Like, okay, so let's say for advertising, it's competing with Google. And I've tried both Google Ads and Facebook Ads. The whole user experience for Facebook Ads is actually quite bad. It's like even Facebook themselves don't really care about the advertisers. That's just my opinion. I also did some survey. So all the people who tried to advertise on Facebook, they had trouble eventually. Then, so that's the first part, advertising. Then as for the metaverse, it's trying to compete with like maybe Apple Vision Pro. Okay, Apple don't call themselves the metaverse, but we all know that it's in a way a kind of metaverse, in a way. Then maybe Roblox, that kind of metaverse thing. Then for the social platform, the Facebook thing, is probably competing with TikTok, YouTube, this kind of platforms. So in a way, they are trying to compete everyone, fight against everyone at the same time. And it feels like they are not able to win against them. So that's my thought.
Personally, I slightly disagree here. Bunti, you want to start first?
No, I just want to add the not compete with any other companies that they are copying many other companies lah. Copy feature, copy here, copy there. That's the style.
But I think I slightly disagree in a way where, in terms of the idea of a social media space, I think if you really want to talk about network effects, I do believe still fundamentally that Facebook has the strongest network effects out of all social media companies out there, whether you put in Snapchat, YouTube, whatever, because it still goes to the underlying element or core of social, which is where your friends, families, whatever is still on that platform. Compared to TikTok, I'm not too sure whether your sister or your mom dances on TikTok, but it's a different ballgame when you compare to YouTube or when you are passively consuming rather than actively engaging. So, which is why I think I written about it the other time when I was trying to research the different elements of what make a social media platform, particularly so Meta, work. But yeah, that's just my general thoughts. So I think I just wanted to group two questions together. It was the first question was from Roy. So he said that not sure if you have listened to Mark's very long vision on metaverse during earnings call. Do you believe he will succeed given most of his success is from acquisitions? And then I want to pair up a second one where he was talking about in the earnings call by JYSN. Zuck was questioned what's the ROI of Reality Labs. He didn't want to commit but laid out his vision, which was to capture his own platform, not to be constrained by Apple, and then be able to leverage. So I think that if I did follow some of the earnings call and actually some of his public interviews in some of the YouTube channels out there. So Mark has been very generous with his time. He goes onto a few YouTube channels to provide his opinion on this whole metaverse thing. I think there was a clear shift in stance. Last time he was still pumping it. Whoa, I'm very excited. Metaverse is gonna be the next generation computing and stuff. But I wanted to quote this part out so that y'all can kind of understand where his current state of mind is. So, and I quote, at a deep level, I understand the discomfort that a lot of investors have with it because it's just outside of the model of even most long-term investors, how you would think about this. And look, I mean, I can't guarantee you that I'm going to be right about this bet, but I do think that this is the direction that the whole world is going in. There are 1 billion or 2 billion people who have glasses today. I think in the future, they're all going to be smart glasses, unquote. So this is what he says. So I think when you compare his stance and how he portray his vision, right, he's starting to, I don't know, maybe too much pressure coming from many shareholders. That's why he's starting to second guess his doubt. But I think even at least for the foreseeable future in the next 1 or 2 years, he's committed. He did say that the operating losses on Reality Labs is going to continue increasing. But it does seem like the market doesn't care because he like I said, nature is healing. His ads architecture, his whole AI, Lambda, whatever nonsense that he's talking on the earnings call, it's proving results. Margins are normalizing. It's bringing in back cash flow. So investors are probably more forgiving in terms of his side project or his metaverse. So whether it will play out or not, I think it's really a philosophical debate. Whether you think that's the end game of spatial computing or is that a next generation computing platform? To me, if you ask me, I do buy into this vision. But whether is it Meta or whether is it Mark Zuckerberg that delivers it, I don't know. And I'm not betting on it anyway when I initially invested on it. But yeah, I see Bunti unmuted. So you want to comment or something?
No, I actually just want to ask, like, let's say if you re-look at the companies right now, what's the if you do evaluations, right? Is it still attractive or not? So that's my questions. I give Chicken some time to think of how to answer, and just to comment on what you just commented, right? I think we shouldn't forget that how many rounds of layoff that Meta just like just lay off, cut costs. So focus on the efficiency. Those are the stuff that I think makes sense to do. So when the companies become too bloated and they just cut costs and make it like, I mean, give more money to the shareholders, right? I think shareholders always happy with these kind of things, lah. So that's my comment on your comment. Now back to your comment on the valuation. Is it still attractive now or not?
I mean, I will leave the valuation modeling to Kelvin because Kelvin actually modeled something. But just to give you quick dirty numbers, right? It's very simple. I mean, if you have to ask me now, $300 can buy. I'll tell you the answer is I don't know. But then when you asked me the other time when at 160, because when I made a video, I think it was $160. So I of course not financial advice, but that time I was a lot more upbeat and telling people that hey, I'm buying, guys. But when it was $80, then I didn't make a follow-up video lah, which was quite wasted. But yeah. Anyhow, I think just to give some historical perspective or relative valuation perspective, right? I wanted to say Alibaba, but Facebook was trading around a 20 to 40 times free cash flow based on their historical valuation. So right now, if you look at it from a trailing 12-month perspective, it's around 23, 24 billion. Their peak was around 40 billion. So if you compare now, trailing 12 month, 23, 24, peak 40. Is it representative? The trailing 12 month, I tell you, I don't think it's representative because in the last quarter, not last quarter, in the Q3, I think free cash flow was zero. I don't believe that this will continue on. So then you ask me which is more representative. Short answer again, I don't know, but I think it's in the middle. So 24 to 40, you choose where you want to go. So if you divide it by the $800 billion plus market cap today, at 40 billion, that's around 20 times. At 30 billion, it's around 25 times. So 20 to 25 times or 20 to 28 times compared to the historical 20 to 40 times. You make your own decision. I do still think that we are on the lower side of the historical valuation. But in case people start killing me in the comments, Meta then, when it was trading at 40 times free cash flow compared to today, it has fundamentally changed. Last time don't have this metaverse thing, don't have this burning on operating in terms of the operating income and why the margin is going down. So you need to make a educated guess in this case. I will tell you that if I have shares now, I'm still holding. I do know that a lot of people that exited, they bought in at 110, 120, 150, 200, 220, take profit. So go find the next opportunity. I think there is nothing wrong with doing that. But to me, I've been holding, I'm still holding. And at least for now, I don't intend to dispose unless it gets egregiously overvalued. Now, you ask me at this valuation, is it egregiously overvalued? I don't think so. I think it's right about where we are supposed to be at. So that's my long answer to your short question.
What if metaverse spending keep going up, climbing 30% per year, keep climbing? Are you worried?
Then if so, then what's the margins we are going to talk about? If they're able to hold, like now, I mean 29, if they're going to continue normalizing up 32, 35, revenue can keep going up. Lambda seems to be a good open source project. I'm going to just throw complicated terms out to make myself sound smart. But if all the AI tools start getting more ROI for advertisers and numbers show, he can burn whatever he want as long as it comes back down to bottom line. Free cash flow, share repurchase, whatever you're going to do comes back to shareholder. I think market is still going to recognize the effort.
Yeah, I think there's
Let me
one question I
okay.
just call out to know whether Kelvin is prepared to share his valuation or not. This question's from Jay. Could AI cause a reshuffling of the market leading to the rise of new influentials companies? Apple, Google in early stages, while one or two existing big tech firms, examples like BlackBerry, Yahoo, slowly fade from prominence. So do you think that this will be the situations that we are going to see where some companies they just shine like but some companies will just die down because they fail at AI. So do you think this will happen? Questions to all three of you.
I personally, I don't think I don't think there will be a shuffling lah. Like if you check this whole there's a website for new AI tools lah. Every other day, right, there's new AI tool popping up. So it feels like there isn't any one tool that is dominating the whole thing. Because for one ChatGPT, right behind ChatGPT is like 100 over similar chatbots. Then for like big other similar tools, there are a lot of other clones lah. So for now, they are still fighting among themselves. I would say that there's no winner yet, except for the existing top few companies. So like, because for like I say for Google, it is already in the status quo for everyone. For Microsoft, is already the status quo for everyone. So it's already embedded in the thing that people are already using. So unless people move away from those software, I don't think there'll be any reshuffling lah. So for example, like Photoshop has the new own generative AI drawing thing.
Firefly.
Is it Firefly? No, it's right within the Photoshop itself lah. So then in that case, it can actually compete with the Mid-Journey, which was everyone was super excited about. But now Photoshop just came out with their own. Then Mid-Journey has to like compete against them already lah. So in that case, it's easier. I feel like it's easier to defend than to take over some other take over the big companies' market share lah.
Eric, eh?
Actually, I'm not really sure how this AI thing will pan out, but I think I'm slowly coming around to the view, right, that in the gold rush, right, that's called AI, right, the ones that sell the shovels will make the gold.
Nvidia. Chicken.
Not TSMC.
Same
what?
same lah.
Right. I have no opinion on this, by the way. I haven't really thought about it, whether will there be a shuffling or not. But I think this whole AI thing, this AI application wise, when you compare to other hype things out there, like I think last time was like 3D printing or whatever lah, whatever was the hot topic of the day, there are a lot more real world implications. And it's not like a new thing. It has been there. It's just that it's not publicized. But now it seems like the more we talk about it, the higher share price go. But ironically, Microsoft tried to do it, but it didn't work. But anyway, I think just to kind of end off the discussion, maybe I'll pass it down over to Kelvin to talk about his different valuation, price points, or perspective. Because there's a question that I think was Nagoro. He asked, a question for later. Out of Microsoft, Meta, and Google, which one is still fair value purchase? So maybe you can shed some light from Kelvin's valuation models.
Yeah,
Let me
good stuff
share
for
screen.
those who stay until the end. Give.
Let me share screen. Oh, can you see?
Wow, coming.
Okay, so this some fake thing. I
see.
haven't
Is this
reviewed
free?
on my. I will make it free. So basically, it is discounted cash flow. I think the three of them are very pro at this. So I'm very new at this. So in terms of valuation, okay, so for Google, long story short, Google, I feel is very fairly valued because right now the stock price is at 130, but my calculations show that the intrinsic value is at 190 lah.
This one should be severely undervalued, not fairly valued.
It's based on this 12% growth rate lah. So I think the consensus is about 15% for the next 5 years, but I just put it slightly lower lah. Then the other discount rate, I just put it lower also, about 12%, 10% also can. 10%, wow, even more upside. So okay, so for one, Google I feel is at a good valuation right now. And to add on Google's to add on for Google, their PE ratio right now is still the cheapest among the three of them. It's at 28 right now. Then moving on, for Meta, for Meta case is a bit more overvalued just based on this whole DCF thing. growth rate 15%, I feel might be on the low end because this whole metaverse thing, it might be their what they call the black horse wild card thing lah. So if it did pan out, right, this 15% would be a joke lah. So it depends. So if it doesn't pan out, then Meta will be overvalued. If it pans out, Meta right now is actually a very good buy lah.
I think
finally
before
yeah.
Sorry if I can jump in here. So I think I did talk about this free cash flow, right? So I think in terms of the projection wise, whether what growth rate you want to put is fine, but it's more of like, because the starting base here, when you look at Meta's free cash flow, right, it's a bit, how do I put it, lumpy or very weird, because that time in that 2 quarters, their free cash flow was hit very severely. So then now the range is, the trailing 12 month is at 23 billion, the peak was at 40 billion. So if you start at a low base of 19 and you grow at 15%, even at year 5, I don't know what's the number because I cannot really see here, but I'm expecting you probably at around 30 or low 30s, which might not be very representative because maybe the next year they are able to jump it up to 30 something already. So that's why the numbers are a bit weird here. That's just my very...
Yeah, the numbers are a bit weird lah.
Yeah.
They haven't really stabilized yet lah. So right now everything's all around the place.
Oh, and on PE also, I went to quickly Google search. The current PE now is a bit distorted. Yeah, it does seem like Alphabet is the cheapest, but on a forward PE basis, assuming that the analyst consensus are fairly accurate, I think Meta and Google is roughly the same at around 24 times. So yeah, that's on valuation perspective.
Yeah, then to continue on, for Microsoft is also on the more expensive side lah. So it's about 60% more expensive compared to current price. So if I were to choose for myself lah, I would go for Google definitely. First thing. But I would also consider Microsoft. Mostly because their productivity tool, the whole AI thing will start to benefit their productivity too lah. So, but I wouldn't buy in as much as Google lah. Just saying. Meta, I will completely ignore lah.
See, there's no love for Meta platforms. How can like that? Actually, why is Bunti as a Microsoft shareholder, right? Why is there such a large this overvaluation in Kelvin's case? I haven't found the issue though. Why it got 60% overvalued?
Microsoft, actually, you just look at the PE, you can tell that it is the one of the most overvalued.
Such a large extent. I haven't done my valuation work on Microsoft.
So it all depends on how you like, because valuations model is really like what's the base that you take, and then what's the growth rate that you assume, and then what's the discount rate that you put in, right? So, and the growth rate sustained for how long, these kind of things. For Microsoft, I think the good stuff that I just shared, right, it's not like I am the only one person know it, right? People also knows. So investors are paying up for this kind of good stuff that's coming. So that's why it's overvalued. That's one reason. Second reason, I think this one I repeated maybe more than two times already. For business like Microsoft, and maybe you can count Apple in as well, right? They are a lot more stable as compared to Google and Meta, which is like depending on advertising. So advertising is not like saying advertising is bad. It's more like when the market is not good, like especially 6 months ago, people are talking about recession coming, hard landing, soft landing. We can definitely see that all the advertisement spends all come down, right? And then of course it hits companies like Meta and Google more. Whereas for companies like Microsoft and Apple's, right, they just like more immune to this kind of shocks. The reason is very simple. I mean, for those who are using Microsoft Excel, imagine that you just have to go to Google Sheets to do your calculations or any other alternatives, right? I mean, it will just like make your entire workflow a lot like not productive. So you're stuck with all these tools. That's why it's very sticky in terms of the business. So if it is sticky and the risk is low, what it means is that the value, people will assign higher value to it. But what it also means is that the returns during good time will be lesser as compared to like Google and Meta. So in other words, people will say like this kind of companies is like they're having lower beta to the, like they are not that sensitive to the macroeconomics, just because very sticky. Yeah.
I think there was a question from Kelvin's group. Actually, because if you were to look at how the stock price has performed, right, at least in the short term, Meta is now rallying. Google had a good 5-6% run. I think only Microsoft was the one that was punished by quite a fair bit, relatively speaking. So I just wanted to go around the table. He was asking, I think the guy, Andy was asking, he was saying, will you sell? Let's assume that you have a position in all these different companies. Will you sell the ones that are green, meaning sell Meta, sell Google, and then start to buy Microsoft? Just wanted to get your thoughts. Eric, will you do it? If assuming that you have all three positions.
No, I won't. Microsoft, I thought Kelvin said overvalue. So I listened to him.
Is that
That's
how
how,
it
that's
works?
how you lose money.
By listening to Kelvin. No, later I will download your spreadsheet that I can see. Go and see how it works.
I think it's also good to do your own valuation and your own assumption so that you kind of know what you're expecting, at least when you buy at a particular price point. Even though you like to believe that yes, maybe companies can grow exponentially in the out into the 10-20 years future, but you are paying a certain valuation today. So your expected returns will be affected based on your entry or exit prices. What about Bunti though? I know you have Google, right? Will you sell Google and buy Microsoft since
Not
one
really.
ran up, one came down?
No lah. I mean, talk about long-term investing, right? Like this is just one quarterly earnings. It's not going to change my mind on stuff or on their trajectory. What I mean is that, for example, like companies like Facebook, I exited also for some, like more like a structural kind of development or reasons. One quarterly earnings, when you see revenue, up beat expectation, or I mean, these kind of things is like, to me, it's just noise. You can't really see the trajectory by listening to one quarterly earnings. You need to follow the companies at least more than 1 year at least, just to know like what are the stories, what are the things that they're building on, what are the direction that they're heading, what are their results. I think one earnings is like just noise now. You can't make sense of it now. So to me, it's just like, okay, keep on following and just stay on it now. But if the entire, like the big directions is wrong already, of course, have to sell that one. No choice. Even
The
need to cut loss.
the biggest wrong is to not smash the like button. There's 100 of y'all here, then we only have 30 likes on the video. That's the biggest wrong that we see here. Anyhow, I think just to kind of circle up the discussion, right? So I think it was also in our title about the Fed. So just announced yesterday, as per the entire expectations, they raised by 25 basis point. So J Star X6 asked, so are we in a bull market or a bull trap? With Fed rates continue to hike and US entering a recession? Question mark. I think Bunti did say that yesterday the recession was told to take a rain check. Maybe we'll reschedule a few years later down the road. But it does seem like that's the current sentiments around many of the investors today. That it might maybe not even a soft landing, by the way. It's just no landing. It just continue flying. So that's the current sentiments now. So whether bull market or bull trap, I think technical terms of a bull market is more than 20% from its lows, right? So we are already in a bull market for quite some time. Bull trap or not, we can only look at it from retrospect, right? Like after 10 years, maybe you look back, maybe this is a rally to a bigger dip. Who knows? But touch wood, let's hope that this is not something like that. But anyhow, just wanted to get your opinions on the Fed, the recent 25 basis point hike, and whether you guys think it's dovish or hawkish from what Jerome Powell has said. I'm not too sure whether you guys have followed what he said yesterday. Kelvin, any opinion?
It seems like they know that the data are good, but they want to give themselves a backdoor just in case the data turns bad. That's why they say that we might raise by 25 basis points. Oh, but this also means that we might not raise the interest rate. So they are giving themselves a 50% chance to raise and not to raise at the same time. But as for the market expectations, no one is believing them. There's the last I checked, I think it's very low chance of raising. Everyone else don't believe what Powell is saying. As for the data for inflation is coming down. Probably the ones that are not coming down yet is service and housing, which could probably come down soon. Then the job market data is still quite strong, but it's slowing down. I think it has to take a bit of time for that whole interest rate to start affecting the job market. Right now, it seems like everything is like nothing is going on. So, but at 5.25%, I think eventually the effect will start kicking in really sooner or later. So for me, my prediction is that there won't be a recession based on current data. Maybe tomorrow data is different. I also want to give myself a backdoor. So so let's see what happens though.
So you just make a prediction, but you will stay data dependent.
Yeah, same as Powell,
Sounds like
based on today's
Powell.
Powell.
Would Eric?
Okay, so I think I'll just repeat what I shared with you guys. I think the market now looks like it's pretty strong, unemployment low, and then if I'm not wrong, the advertising from all the big techs, right, show that the budget from the companies are going back up. It's not like people are still, their purse is not still tightened. They actually loosen it already. So they started to spend again. So the way I see it, I think basically if you're in the company management, if you are starting to spend a bit more, right, it means that you're a little bit more optimistic, right? Like we're not really going to go into a recession. That's why we spend the money. That's why we are okay to spend the money. So I see that the most likely, I think that the economy is like displaying signs of strength. So I feel that power probably will raise it another, maybe one more time. I'm not sure which one he will raise it lah. Probably like one more time. If the data is still continuing so strongly, he probably have to raise it because the inflation, right? I don't know whether is the number correct, 3.1, the core CPI. Not sure if it's really
No, it's not
3.1.
3.1.
What
It's
is
way
it?
Yeah, core
higher.
is higher. Yeah.
Then the 3.1 is which one? I I thought I read something
Yeah,
3.1.
that one is 3% or 3.1. I don't remember. That's the headline inflations. They will include
Uh-huh.
all the energy.
Yeah,
Because
everything in.
energy prices came down a lot more, but the
Oh,
core inflation is a lot higher. I think it's close to 5%, if I recall correctly.
but why should we not include energy? I thought energy is quite a big
Because
part.
Yeah, because this one is very volatile. You don't want to have like the energy prices skew all the entire data. So say for example, during Ukraine Russia war just started, right? So the oil price straight away shoot up already. Then if you just look at the inflation numbers, of course it will go up. But because commodity prices is so volatile that sometimes you get a high number, sometimes you get a big negative numbers. They are not as sticky. Whereas the core one, right? Say for example, like the wages, right? Those services prices, right? So once it go up already, like the barber that help us cut the hair, once they charge higher, you don't expect them to do a 20%, 30% discounts. So it's not as volatile. So these are the sticky one, and these are the one that Fed is trying to manage. So that's why if you look at the core inflation is still high, and they are still like keep the interest rate high just to make sure the core inflation actually come down the 2%. So that's their goal. And they're still, halfway through that. They're still not close to the goal that they want to go. If you just look at the headline inflation, 3% is actually quite good now. It's a good numbers, but the core
Yeah,
inflation is the one that is still not showing that much of a sign, like good sign.
yeah. So if it's like 4.6, like what Andy say, right? I think then power probably has to raise it another one or two times, right? Don't you guys think that?
I I don't think so, because even if they just keep it at like 5.25%, right? You just keep 6 months or 12 months, right? it will be quite painful. Some of the pain will come later. Say, for example, like those who need to service their mortgage. So when you are buying new cars, you need to pay a lot more interest. So you definitely will tighten your spendings, right? Because like these are the stuff that will hit later. So there's a lag effect there that takes some time to actually come in. And also for those who invest in the stock market, right? When you look at 5.25%, actually, why not you just put your money in like all these deposit and like not take the money and spend away or invest in stock market, right? So it will definitely have a cooling effects, but some of the effects will lag, so it won't come immediately. Yeah.
Mm. So I have this question for you guys. So if let's say he keep raising the interest rate, right? And then it keeps going like 5.5, 5.75, then 6% and all that, right? And then the market crashes, right? Means that all the stock become very cheap, right? But your risk-free rate is like 6%. Would you guys put it in the market, or would you put it in risk-free 6%?
I think you also need to ask like what's the environment that we are in, right? Like the market crash so much because of what? If it because of
The high
meteor
interest,
striking, then I won't buy lah.
high interest, because of the persistently high interest, and then the market just, have a quarter or 2 quarter of bad results, and then it start crashing hard, like last year. Then what will you do?
But revenue all still going strong.
No,
Corporate
no,
earnings still strong.
it downward spiral also.
Oh, then
Then
no
would
lah.
you bite the bullet and say, hey, let's buy some undervalued stocks?
Okay, I answer first. I don't know about the
Yeah.
others. I think that if that's the situations, right, I will actually, put quite sizable allocations into like long-term bonds. Let's say when yield is like 7-8%, right? You just lock in for 30 years, right? Actually, just to lock in the 7 or 8%, I think is very, very decent. It's a bit like those who, in the 80s when interest rate was very high, right? Of course, if you invest in S&P 500, you can get a very good returns. And you invest in bonds, long-term bonds, you also can get a decent, like 10, like double digits returns for lock in for 20, 30 years, right? But the difference between these two is that one is uncertain, like you said, spiral down. You don't know how bad it's going to spiral down. Why not we put a good allocations into bonds, like just lock in and just 稳稳 jiak bee hun for 10, 20 years, right? Why not, right? So I think it's very attractive now. So but definitely it's not like black and white. It's not binary decisions, right? But I do see the attractiveness of locking in at 7 or 8%. Unless the inflation is super high, then you need to think twice. Because inflation is high, then you will say, okay, then why not I just buy into stocks, right? Because stocks, you profit from the entire growth of the economies, including the nominal growth, right? So then that one you might want to stay away from bonds. Yeah. Okay, pass to the other, Kelvin.
For me, okay, I'll give an unexpected answer lah. So, the obvious thing would be to DCA downwards but I would say other than that, if all this what interest rate is at 6%, you can very well expect our CPF to start reaching 5% already, at least at 5%. The most recent one that just increased to 4.1%, which is like give, no give, might as well don't give, that kind of thing. But if interest rate really reach 6, CPF you will start seeing 5, 6 already. So one thing you can do is start topping up your CPF if it really reaches that kind of rate. Start transferring OA to SA to lock in that high interest rate. The other thing is I will start also looking at LIPS already. Look at LIPS. LIPS is a long, I also forgot what's the full name. It's basically a long dated expiration option thing. It's a play where it limits your downside but gives you unlimited upside kind of play lah. Very technical lah. I got a video about it if you need to understand it. So LIPS is one thing where I will start looking into, not just dollar cost average down, but also look into LIPS and start topping up CPF lah.
GK?
I think this is a very interesting question. I would presume that if your long 30-year bonds are 6-7%, assuming that the yield curve is inverted, means the short term 1-2 year is 13-14%. In order for you to have a 6-7% 30-year I don't know lah. This is all making assumptions lah, or maybe even 10% in the one rolling 12, 18 months kind of bond yield. Personally, I mean, naturally, there's always some sort of equity risk premium. Meaning, if you put money, you risk your money. There should be a payout lah. Like if you take risks, there's supposed to be a payout. So if you are talking about like stock picking, in a downward spiral, maybe I'm a bit more scared because I don't really know which company is gonna stay on. But if you ask me, want to invest into S&P 500 or whatever the main index of the day is, like Dow Jones or whatever it is, maybe I would probably think of putting into like short-term bonds, which is your 1 year that use like an incredible amount of interest rate, and then take out and throw into equities market when you can kind of see some signs of recovery. I wouldn't really lock in like the 30-year, like what Bunti said, because I think at that point in time, if you have that kind of rates, I'm also quite worried of what kind of environment we are in, specifically like inflation and whatnot. So that's just I still believe that I'm a long-term optimist. I will invest in equities, and equities should be able to harvest some sort of premium back to me in the long run. Yeah.
TK, I thought you have been preparing yourself for market crash.
What do you mean by
trading
preparing
yourself.
myself?
Yeah, you have been training yourself with Alibaba and Facebook already.
No lah.
It
comes
it's
together.
Like my time has come.
No, it comes together as a package because of my investing philosophy. Because I like to catch falling knife. That's why I have to go through that kind of mental training and psychology that the stock keep going down and I have to keep buying. Yeah, but that's a different topic lah. Anyway, I think there was one question from Roy. Roy started. He very loyal. He started from the start and then all the way until the end. He still keep asking questions. So I'll just provide a very short. It's directed at me lah. So he started. Question for Chee-Keng. Seems like ad spend is increasing in the US, at least for bigger tech companies. So do you think this will apply to China big tech too? And then the second comment, we would like to hear Chee-Keng's view on ad spend in Chinese market too, given that Tencent's earnings is upcoming. I think not foreign to many people. The two biggest position in my portfolio is Alibaba and Tencent, and they are deeply tied to the whole Chinese economy. A majority or a bulk of their earnings is from the Chinese ad spend because, I mean, from the e-commerce perspective, people want to sell. Most of the advertising dollars is recorded as their revenue rather than the GMV, like what Amazon or many of the other retailer companies are doing. On the flip side, I think also for Tencent, their advertising spend is around 25 to 30% of the entire business as well. Not forgetting all the gaming, WeChat, whatever. My short answer to the question is I'm still holding on. So you should probably know what my expectation is. I'm not going to belabor the point, but yeah, I'm still holding. And I am still optimistic about the recovery. And we do see some sort of normalization in terms of margins, in terms of growth rates as well. So yeah, that's about it. Anyhow, any separate questions? I think if not, it's getting a little bit late. We are live for more than 1 hour, 20 minutes already. 117 of you guys, 48 likes. Utterly disappointed. I think that pretty much sums up my feeling for tonight.
I cannot be like that one. So still need to appreciate those who give the likes, right? Yes.
Of course. Let me
Positive.
sleep better. So please help me smash the like button.
Thank you. Yeah, thank you for those who like the videos. It help out
Yes.
to promote the videos and also the channel. And who
Yeah, I think-
hasn't subscribed, please remember to subscribe.
Yes. I think any last question, last one or two, we can take in one or two more questions before we end off the call. There's this goal discussion in the the chat. Apparently, I haven't really been following. But we made a poll 15 minutes ago. There's around 59 votes. 73% of you guys are bullish now. 27% is bearish. So I guess the classic Buffett quote, right? Be fearful when others are greedy. Be greedy when others are fearful, right? Interesting. Okay, doesn't seem like there's any outstanding questions. So hope you guys enjoyed the discussion and thank you guys for joining us. Specifically for many of our Singapore viewers, it's late at night. Tomorrow it's a Friday, so we all still need to go work. So yes, hope you guys enjoyed the discussion and we'll see you guys in the next video. Goodbye.
Bye bye.